The AI/ML model integration with application software module-wise diagram illustrates how various business modules are interconnected, for enterprise resource planning, ERP, or similar integrated software systems. Each module has a specific role and interacts with others to create a cohesive system for managing business operations. Here's a breakdown of the modules and their connections. Pradeep K. Suri. Author, researcher, and AI/ML architect. 1. General Ledger and Budget, Central Module. Positioned centrally, this module is the core of financial transactions and budgeting, linking to almost all other modules. It consolidates financial data from various parts of the organization, helping in budgeting, accounting, and financial reporting. 2. Accounts Receivable. Tracks incoming payments owed to the company by customers. Linked to General Ledger for recording incoming cash flows and adjusting budgets accordingly. Also linked to Cash Management for managing cash inflow and sales order and invoicing to ensure that customer orders are invoiced and payments are collected. 3. Accounts Payable. Manages payments to suppliers and creditors. Linked to General Ledger for updating expenses and budgeting. Connected to Cash Management for managing outgoing cash flow. Tied to Purchase Order to reconcile payments with ordered goods or services. 4. Fixed Assets. Tracks long-term assets like machinery, equipment, and buildings. Linked to General Ledger for accounting depreciation and asset values. Associated with taxes for calculating asset-based taxes. 5. Taxes. Manages various tax-related calculations and compliance. Linked to General Ledger for financial recording and tax reporting. Connected to modules like Fixed Assets, Accounts Payable, and Accounts Receivable to handle tax aspects related to income, expenses, and asset values. 6. Cash Management. Central hub for managing cash flow within the organization. Linked to Accounts Receivable and Accounts Payable for tracking incoming and outgoing cash. Integrates with General Ledger for real-time updates on cash position and budgeting. 7. Letters of credit and trust receipts. Typically used in trade financing, facilitating international transactions and credit. Linked to General Ledger for recording transactions related to credit and trust receipts. Connected to Purchase Order to facilitate payment guarantees for purchases. 8. Warehouse. Manages storage, inventory levels, and logistics. Connected to Inventory for tracking stock levels and Purchase Order to receive ordered items. Linked to Production to ensure material availability for manufacturing. 9. Purchase Order. Manages procurement of goods and services from suppliers. Linked to General Ledger for expense recording. Associated with Inventory to manage stock levels and reorder items as needed. Connects to Warehouse for receiving and storing ordered items. 10. Inventory. Central to managing stock levels, ordering, and tracking goods in real time. Linked to General Ledger for valuing inventory and financial reporting. Connected to Sales Order and invoicing to fulfill customer orders and production to supply materials for manufacturing. 11. Production. Oversees the manufacturing processes within the organization. Linked to Inventory for material sourcing. Associated with General Ledger for recording production costs. Connected to Warehouse for storing finished goods. 12. Maintains Management. Responsible for managing maintenance operations on assets and infrastructure. Connected to Inventory to ensure availability of spare parts. Linked to Production for minimizing downtime by timely maintenance. 13. HRM, Personnel, Payroll and Time Management. Handles human resources functions such as payroll, attendance, and time tracking. Linked to General Ledger for recording payroll expenses. Associated with Fund Management, Project management and job costing to assign HR costs to projects. 14. Fund management, project management and job costing. Manages project-related financials, costing, and job assignments. Connected to general ledger for budgeting and financial reporting of projects. Linked to HRM to incorporate personnel costs into project expenses. 15. Sales order and invoicing. Manages customer orders and invoicing. Linked to general ledger to record revenue from sales. Connected to accounts receivable to track payments from customers. Associated with inventory to ensure ordered items are available for delivery. 16. Sales analysis. Provides analytical insights into sales performance and trends. Connected to sales order and invoicing to analyze customer orders and revenue. Connected to general ledger for revenue-related data to aid in financial forecasting. Integration overview. The red arrows illustrate the flow of information and transactions between modules. This integration enables efficient financial management by linking financial transactions directly to operations. Improved cash flow management with real-time tracking of payables, receivables, and cash reserves. Streamlined operations as inventory and production are aligned with orders and procurement. Enhanced HR and project management by incorporating HR costs and project budgets directly into the financial system. Each module is connected to ensure seamless data flow, aiding AI/ML models in analyzing operations, predicting trends, and optimizing processes across the organization. Based on the modular integration in the diagram, here is a suggested list of reports and graphs that could be valuable for top management, middle management, and operational level. Each level will require different insights tailored to their decision-making needs. 1. Top management, strategic level. Reports. Financial overview report, consolidated report on revenue, expenses, and profit margins. Budget versus actual expenditure report, shows budgeted versus actual costs for major departments. Project performance summary, summary report on key projects, including timelines, budgets, and status. Sales performance report, overview of total sales, growth trends, and market share. Executive summary, highlights of critical KPIs across all departments. Risk assessment report, report detailing potential risks in finance, operations, and HR. Cash flow forecast, monthly/quarterly forecast of cash inflows and outflows. Employee turnover and retention report, summary of HR metrics focused on employee retention. Graphs. Revenue versus expenses over time, line graph showing trends in revenue and expenses. Profit margin trend, line graph or bar chart showing profit margin trends over time. Departmental expense breakdown, pie chart or bar graph detailing departmental spending. Project completion status, Gantt chart or timeline of ongoing and completed projects. Sales growth trend, line graph or bar chart for sales growth by month or year. Risk analysis heat map showing the impact and likelihood of identified risks. Employee retention rate over time, line graph to monitor changes in retention. To middle management, tactical level. Reports. Departmental budget versus actual report, detailed budget adherence report for each department. Inventory aging report, shows aging of inventory to manage stock turnover. Production efficiency report, reports on production cycle times, wastage, and output quality. Accounts payable/receivable aging, aged payables and receivables to manage cash flow and credit risks. Employee performance summary, summary report on individual or team performance. Operational expense analysis, in-depth breakdown of operational expenses. Warehouse stock level report, report on stock levels, reorder points, and safety stock. Customer satisfaction report, customer feedback report on sales and service. Graphs. Department-wise budget versus actual expenditure, bar chart or line graph. Inventory turnover ratio, line graph or bar chart indicating inventory turnover. Production efficiency trend, line or bar chart showing monthly or quarterly efficiency. Accounts receivable/payable aging, bar chart or stacked bar chart to show outstanding amounts by age. Employee performance distribution, bar chart or box plot for performance scores by team. Operational cost breakdown, pie chart or stacked bar chart for operational costs. Stock level trend, line graph showing stock levels over time. Customer satisfaction ratings over time, line graph showing satisfaction trends. 3. Operational level. Reports. Daily/weekly sales orders and invoices report, real-time tracking of daily and weekly sales. Purchase order status report, status of pending, approved, and completed purchase orders. Production output report, daily or weekly report on production quantities and quality metrics. Inventory usage report, real-time usage and stock levels for raw materials and finished goods. Payroll and attendance report, detailed report on payroll, hours worked, and absenteeism. Expense voucher report, tracking of departmental expenses with details. Maintenance schedule and status, report on scheduled and completed maintenance tasks. Customer complaints and resolution status, report on customer complaints and resolution actions. Graphs. Sales order trend, line or bar chart showing daily or weekly sales trends. Purchase order fulfillment rate, line or bar graph showing fulfillment rate and delays. Production quality metrics, line chart or bar chart for defect rates, cycle times, and output volume. Inventory usage over time, line or bar chart tracking material usage. Payroll and overtime trends, line or bar chart tracking payroll and overtime hours. Expense by voucher type, pie chart or bar chart by type of expense. Maintenance completion rate, bar chart showing completed versus pending maintenance tasks. Customer complaint resolution time, line graph showing average resolution time for complaints. These reports and graphs can be tailored according to specific needs in each department or functional area, offering valuable insights at each level of the organization. This Sankey diagram illustrates a hierarchy of reports and graphs associated with 3 different levels of management within an organization: top management, middle management, and operational level. Each of these levels has specific reports and graphs tailored to their informational and decision-making needs. Here's a detailed breakdown of the structure. 1. Management levels as sources. The left side of the diagram shows 3 main categories, representing the hierarchy of management levels. Top management, typically responsible for the overall strategic direction of the organization, so their reports focus on high-level summaries, financial health, performance metrics, and forecasts. Middle management, often responsible for departmental performance and resource management, so their reports tend to focus on departmental budget comparisons, operational efficiencies, and employee performance summaries. Operational level, concerned with day-to-day operations and frontline metrics, so their reports include detailed views on sales orders, purchase order status, inventory usage, and payroll. 2 reports and graphs for each level. Each management level has its own set of reports and graphs tailored to the information relevant to their responsibilities. Top management reports and graphs. Financial reports like Financial Overview Report, Budget versus Actual Expenditure Report, Sales Performance Report, etc., help track overall financial health and performance. Performance metrics like project performance summary, risk assessment report, employee turnover and retention report, and cash flow forecast provide insights into organizational health and employee dynamics. Visual tools such as profit margin trend and departmental expense breakdown help in making strategic financial decisions. Middle management reports and graphs. Department-specific reports like departmental budget versus actual report and production efficiency report provide insights on department-level performance and resource management. Inventory and customer satisfaction metrics such as inventory aging report and customer satisfaction report offer insights into operational efficiency and client feedback. Employee performance indicators like employee performance summary and employee retention rate over time assist middle managers in managing their teams effectively. Operational level reports and graphs. Daily operational reports like daily/weekly sales orders and invoices report, purchase order status report, payroll, and attendance report are essential for monitoring day-to-day operations. Specific metrics like inventory usage report, maintenance schedule and status, and customer complaints and resolution status help track inventory flow, maintenance operations, and customer service metrics. 3 link colors. Each link, colored line, between a management level and its respective reports or graphs is uniquely colored to differentiate them visually, enhancing clarity. These links represent the flow of information from each level to its relevant reports and graphs, making it easy to trace each management level's specific data needs. 4 design elements. Dark background. The black background with white labels and vibrant colored links highlights each connection between management levels and reports, making the diagram visually engaging and improving readability. Labels and colors. Each management level node and report/graph label is clearly visible with contrasting colors to enhance the diagram's visual structure. 5 use case. This hierarchy allows decision makers to quickly understand which reports and graphs are associated with each level. For example, top management may use strategic reports to make high-level financial decisions. Middle management use departmental reports to optimize resources and departmental efficiencies. Operational level needs specific data to manage the day-to-day operations effectively. By visualizing information flow in this structured manner, it helps clarify reporting responsibilities, decision-making dependencies, and data prioritization at each management level. Overall, the video demonstrates the information flow from different management levels to their tailored reports and graphs, enhancing organizational insights at each hierarchical level. The diagram titled AI/ML Model Integration with Application Software Modules by Pradeep K. Suri illustrates the integration of various application software modules with a central general ledger and budget system. Here's a detailed breakdown. Central system. General ledger and budget. This is the core of the financial management system where all financial data and budgetary information converge. Integrated modules. 1. Accounts receivable. Tracks money owed by customers and ensures timely collection of payments. 2. Accounts payable. Manages the company's obligations to pay off short-term debts to its creditors and suppliers. 3. Fixed assets. Keeps a record of the company's long-term assets and their depreciation over time. 4. Taxes. Handles the computation, reporting, and payment of various taxes to ensure compliance. 5. Cash management. Monitors and manages the company's cash flow, ensuring liquidity and financial stability. 6. Warehouse. Manages inventory, stock levels, and logistics within the warehouse. 7. Letters of credit and trust receipts. Facilitates international trade transactions by ensuring secure and timely payments. 8. Fund management, project management and job costing. Tracks and manages the funding for various projects, overseeing budgets and costs. 9. Sales order and invoicing. Manages sales orders, generates invoices, and tracks payments from customers. 10. HRM, personnel, payroll and time management. Manages employee data, payroll processing, and timekeeping. 11. Inventory. Keeps track of the quantity and location of stock items, ensuring proper stock levels. 12. Production. Oversees the manufacturing process, including production planning and control. 13. Purchase order. Manages the procurement process, including order placement and supplier management. 14. Maintenance management. Ensures that all company equipment and assets are maintained properly. Flow and interaction. Colored bands. Each module is represented by a distinct colored band that converges into the central general ledger and budget system. Integration. The convergence of these bands highlights the interconnectedness of various business functions and how they feed into the financial core. Summary. This diagram emphasizes the seamless integration of different business processes and functions into a centralized financial system. It showcases the importance of a unified approach to managing financial data, ensuring accuracy, efficiency, and comprehensive oversight. Thank you.